Hey everyone, I'm Charting Man Dan with the Chart Guys, checking in on the markets. We had Microsoft and Nvidia hitting new 52-week highs today, but a look under the hood shows a whole bunch of weakness in our other major sectors. The tug of war continues. We've got an extremely tight range on the S&P 500, and volatility is coming to end the week.
So we can say volatility is incoming on the S&P 500 because of how tight we are trading within this range. And as a trader, I identify tightening ranges to tell me volatility and volume is incoming, because we know volatility and volume means trading opportunity. If something is trading sideways, the pie is this big, and if I'm going to get my piece of the pie trading within that range, it's small. And when the range expands, that's when my piece of the pie can be bigger, because the pie itself is bigger, the amount of range we see on any given day. So looking at SPY, we can see we've been trading pretty much within the range of Wednesday, May 10th's candle, and we've been trading within that range for the last 8 days. And today was a second daily inside bar in a row. The bears did their best to break support into the close, and they failed to do so, but certainly a bearish close down at the low of the day. So I'm going to be watching these inside bars, but I care most about 408.87, and we are going to be watching for a volume and volatility spike probably this week. We've got 3 trading days left to go. So today was full display of what everybody's talking about, with the markets being held up by just a few names. And that was the case today, where, again, you had Microsoft up at the highs. Let's just run through real quick. So here's Microsoft, and Microsoft was another one where we could say, look for volatility, look for a volume spike, because we are trading tight and sideways. So we got the bull break to new 52-week highs on Microsoft, still just grinding higher. We have Google continuing its big bull move to higher highs. We had Nvidia, although there's an upper wick forming. We'll look at Nvidia in just a moment. And other than that, a couple other major tech names that were up. But if you look at the heat map of the rest of the market, almost every other sector was red. So that's why SPY closed near the low of the day. And QQQ bears showed up. Again, it's the statement that we're looking for is, are the weaker sectors going to join the bulls? Are our stronger sectors going to join the bears? In yesterday's video, I was talking about how our weaker sectors were showing some strength yesterday. Can't be a one-off, one-day event. This has to continue multiple times this week. And it didn't. It was a one-day event. We'll look at all these sectors in just a moment, but they gave back yesterday's strength. And then today it was same thing, intraday. Are we going to see QQQ roll over and join Team Bear? Or are we going to see the weak names bounce and join Team Bull? And at the end of the day, QQQ rolled over and joined Team Bear, and that's why the S&P 500 closed down at the low of the day. So QQQ did hit a new 8-month plus high. It's 2% away from 52-week highs. There is a clear hourly and daily uptrend still intact, but it was almost like the visualization I had today, watching everything trade. It was like QQQ is the biggest, strongest guy in the ring, but he's fighting 4 or 5 other sectors, and those other sectors were winning overall, which is why SPY was down 0.67% when QQQ was up 0.1%. So for me, the QQQ bulls keep complete control as long as 322.94 is daily support. And if that level breaks, that's going to be an uh-oh for the broader market, because, again, right now, the NASDAQ, which is big tech, semiconductors, these are the names that are holding up the market. Reminder, we've got our free trial of the Chart Guys Swing Report. The link in the comments of this video will send you to more information in a video or the sign-up page. See you there. So semiconductors, big upper wick though. So breakout yesterday, followed through this morning, and then a pretty sizable pullback into the close. And this is going to have me looking for hourly lower highs tomorrow. So the SMH bull move was led by AMD with a huge move up this morning. Big follow through on the daily bull flag, confirming a break of 102.43, and that gives us the highest levels we've seen in 8 months. So AMD is a strong name. MU did not participate like the bulls would have hoped. Still struggling right here in the 64s. We did get above these levels, but struggling to close above them. And NVDA heading higher, grinding up as well. Still a rising wedge type of scenario. And I'm going to be scouting NVDA for an hourly lower high tomorrow, knowing that the bears must confirm an hourly downtrend for momentum to shift. And Look at the daily chart. What happens every time in the last 2 months? This is how I analyze charts, just looking at historical observations. What happens every time in the last 2 months when the volume is over this orange line? And this orange line is the 20 period, the 20-day average volume. So let's just go back. All right, we were over, big spike here. Next day, consolidation. Big spike here. Next few days, consolidation. Over it here, consolidation. Over it here, consolidation. Over it here, consolidation. That would be the pattern every time that we've seen volume clearly over the 20 period average. It has resulted in consolidation. If not the following day, it's an inside bar, but the day after that. So usually the following day, but sometimes just an inside bar. So an inside bar may happen tomorrow, but again, I'm scouting an hourly lower high. Today was a 15-minute stair step. And it technically wasn't a stair step here by 6 pennies, but I can say I'm ignoring that. It's a stair step. And that bear break of the stair step resulted in significant bear follow through. So I'm scouting an hourly lower high on NVDA tomorrow. Yes, it is a lead bull, but bulls are getting a bit tired. Every break that we see of resistance results in consolidation because, everybody asks who's buying up here. In my opinion, I just imagine me being a trader. If I'm in that name, every new high that's being hit is some bears stopping out. And so, we'll see. Healthcare, weak. So talked about the lower wicks on the daily time frame yesterday. Needed to see the break of the high of yesterday today for the bulls to try and shape up a similar chart to the semiconductors, and big fail. Close at the low of the day. Healthcare remains our weakest major sector, and we're testing the recent low of 130.62. And if that breaks the weekly bull flag, the potential weekly bull flag that's been trading sideways for the last couple of weeks, will decrease probability significantly. And at that point, I'll just be back to viewing this as an equilibrium. And we'll still scout a higher low compared to 123.60, but then we're going to be watching for the tightening range rather than the continuation move. So healthcare, still clearly for the bears right now. Tesla's got an investor day right now, and Elon Musk is going on CNBC. Price is slightly up after hours, but we failed to break the high of yesterday by 24 cents. So bears are keeping overall control unless the bulls can confirm an hourly uptrend, which they have failed to do. We broke the low of yesterday with zero follow through, pretty much a double bottom, big bounce, but have to confirm an hourly uptrend. We'll see if the shareholder meeting or Elon Musk can help shift correlation because the bears have had control the last couple of days. The financial sector. Bears are getting top fishing plays, meaning yesterday we rejected from the high of Friday by 2 pennies. Today we rejected from the high of yesterday by 3 pennies. And now we have a new daily lower high set, 32.24. So this was another one where the bulls have to break this inside bar bullish to try and shift this momentum. They failed to do so. So the bears are keeping their control. And the new simple statement is, if 32.24 is resistance, the bears have absolute complete control of XLF and nothing to worry about. KRE tested daily resistance today. It had relative strength this morning. Looks like it's up after hours. I don't know what's going on here. Not much volume. We'll see where we stand tomorrow morning. Anyways, we had relative strength on the morning, rejected from daily EMA 12. Our daily lower high was 38.20. We failed to break that level by 21 cents. And so now it's going to be all about 35.76 support to see if the bears can continue the daily downtrend. IWM, another one which was close to shifting that momentum yesterday, failed to break resistance. Weak close at the low of the day. A lot of this had to do with the biotech sector because the biotech sector had bearish news. And if IWM breaks 170.165, bears back in complete control. The biotech sector bearish news was, I forget the companies, but a buyout deal is being questioned by the government. So we had a bullish reaction when that buyout was announced and now have to reprice in the potential that that buyout does not take place. And we lost the daily uptrend by breaking 84.69 support. So a notable shift in the biotech sector, watching for the potential of weekly consolidation. Last week, bearish indecision candle. This week, we've got an upper wick, 3 trading days left to go. But long story short, yesterday I talked about this would be a path for the bulls if we see these weaker sectors join the stronger names. And today was, nope, not happening, at least not now. And so that has me shift my perspective. And I will be ready to jump on Team Bear very quickly if we start to see the NASDAQ weaken. Until then, if SPY's sideways, the weaker names stay bearish, the stronger names stay bullish. That's been the case. And once SPY gets a convincing break with volume behind it, we're going to be looking for follow through. Right now, after hours, we've got a little bit of a bounce for SPY off that low of yesterday, trying to remain within the tightening range. So again, that's one thing for me as a day trader that is attempting to swing trade more these days, but very much unattached to my bias. And my bias is the S&P 500 is not going to drop far if all these major tech names keep hitting higher highs. But as soon as that stops, if we roll over, I will definitely jump on the bear side very quickly. So at this point, I'm just waiting for SPY to break this sideways range. And yesterday, we were closer to resistance. And now today, we're closer to support. Tug of war still ongoing. AI, some nice bull follow through. We were looking for an hourly higher low to be the result of consolidation. The bull set that on the morning and took over for some nice upside action. But keeping an eye out for daily consolidation, knowing a weekly lower high is the most likely scenario. And that's the other thing with the semiconductors, and a reason why I'm keeping an eye out for a bearish entry on a name like NVDA is because SMH may give us a weekly lower high. I'm definitely open to that possibility due to the size of the pullback we saw a couple months ago. The dollar is a potential daily little bull flag. Very healthy consolidation at this point. Bull cross of the EMA in the 12 and 26. If we get over 102.75, it's follow through. Every new high of this move that we see decreases the probability of a weekly bear flag. So as I was talking about yesterday, the bears, dollar bears and broader market bulls really wanted to see the dollar retrace 50%, which it did not do at this point. So the dollar is staying strong, and that's leading to further metal weakness. Gold rolling over to join silver weakness. Silver started the way down. 1969 breaking on gold would be shaping up monthly consolidation. And again, this is, if we break 1969, it is a very convincing third rejection from the all-time high. I guess that would be a second rejection from the all-time high. Silver following through for the downside. Tons of space for a daily lower high next bounce. Miners daily bear flag confirmed. So we are strengthening in the dollar and weakening in the metals. And the lesson and the takeaway for me, I'm going to keep going back to that tweet because I was bullish the technical setup as we broke resistance. And then the tweet was, I wish there were a lot more bears. I wish there were a lot more metal bears on Twitter. Everybody was looking in the same direction. Everybody was on one side of the boat. Quick flip. Surprising a lot of people to just, in a week's time, 5-7 trading days, completely shift from strength to notable weakness. Oil's trying for the daily higher low, failing to form it at this point. Have to confirm the 4-hour uptrend, unable to do so. Failed to break resistance here by 3 pennies into a further pullback. So no daily higher low established at this point. And natural gas, nice follow through, but the weekly resistance, if you look at natural gas futures, continuous contract, failed to break resistance. And now the question is, do we see daily consolidation shape up after the profit-taking morning? Bears can taste it. Bears can taste it if we get QQQ weakness. We've got an hourly uptrend. We've got a daily uptrend. We will see. It's going to be an exciting week, end of the week, in my opinion. If it's not, it's going to be the most boring week that I can remember in many years in the S&P 500. So my money is on breaking this range. All right. Hope you're well. Do good things. And we will see you tomorrow.
It's just a little baby bunny.